Hello viewers, hope everybody is doing very well today. So we are going to be talking about current market condition and economic condition. Before we start talking about, if you like this channel, please subscribe to this channel and hit that like button so that whenever I create more videos, you will get like a notification and watch these videos. So yesterday, Bureau of Labor Statistics, they announced the CPI, Consumer Price Index number, came before the market open, and CPI basically indicates how this economy, the prices is going increasing or deflating every year. So the numbers are showing that inflation is really slowing down. So for the month of June, the CPI number, the core CPI number is at 0.2%, and the consensus was 0.3%, so which is lower than 0.3%. So actual the real number came out at 0.2%, and year over year the number is 3%. So for last 12 months, the inflation, basically the prices are increasing by 3%. And 2 years ago, in March of 2021, the CPI, the inflation was 9.1%. So it has come a long way, the inflation coming down from 9% to 2%. 3%, sorry. So it almost came down like 6%. So in all of these like components, CPI components, say like gasoline, food, transportation, everything is coming down. The nagging component is the shelter. Shelter prices are actually gone up, and about 30% of this CPI is contributed by the shelter component to the CPI. So all the economists, they're saying even the shelter numbers are going to be coming down. So once that come down, the CPI is going to be even like the consumer price index is going to come down even lower. And this is all that because once the inflation went up, Federal Reserve, they started raising interest rates from 0% to current Fed fund rate to 5.25%, and also before they kept it at 0% for a very long period of time. When the COVID happened, US government was giving a lot of money, free money, and they were saying inflation was happening, but it's going to be transitory inflation. So the Federal Reserve, they got it wrong. I mean, they have hundreds of PhDs. Their whole job is to basically estimate and forecast how much the CPI is going to be, but they got it wrong. And they basically last over many months, they have been raising interest rate 25 basis points, 50 basis points, couple of times, I think 4 times, and then slowed down a little bit, 25 basis points. So last month, it stopped. But in the last FOMC meeting, the Fed Chair Jerome Powell, he said that they are going to be watching the data, and most likely they're going to be raise interest rate by another 25 basis points in this upcoming July meeting. Meaning the Fed fund rates are going to go up even higher, and they're going to do, I believe, one more time rate hikes, sometimes in September or December time period. They just want to make sure the inflation really basically comes down to 2%. That's the target. They're trying to bring it down, but there are side effects. If they raise the interest rate too much, it will impact basically all these banks. They basically have those their positions in their treasury. The bond positions, the price could go down, like the way it happened for Silicon Valley Bank or First Republic Bank. So Fed's got to be really careful. And also basically as a result of interest rates are going up, the mortgage rates are also going up. 2 years ago you could buy houses almost all over the country. You could get like 3%, 30-year mortgages. But here in California or like other parts, like the interest rates are going up to like 7%. So your monthly payment have gone up like significantly. So people are not selling out their houses, basically like cannot buy like more houses, and that there's a big inventories. So people basically like people are staying in the same place. So shelter prices are also going up. The rental prices are going higher and higher. So that's basically like the current economic snapshot is that the economy is kind of like cooling down. The price rises have come down. So Federal Reserve probably like after a couple of months they probably will start like go in a pause mode and then start cutting rates. With that, basically, if you notice the financial market, like the Dow Jones, Nasdaq yesterday, basically it came jumped quite a bit higher, and today interest rate like today is Thursday. The rates basically like the 10-year rates fell down even lower. So the Nasdaq jumped up quite a bit higher. And many of these people are like saying that by the end of the year, some of the pundits, they are saying market could go up even higher. I mean, there could be like some ups and downs in between, say like 1 or 2 months, like during the autumn time, basically like there could be like some sell-offs like in October period, and then but the market should go up basically like at the end of the year, like like a Santa rally. So I guess so what they're saying is that maybe you can take some profits if you had like some of these stocks, and then if you have an opportunity, say some of these like stocks go down, then you can get into the market again, and hopefully like after that the interest rates will come down, mortgage rates will come down. Hopefully like it will be like more reasonable to buy like houses. So that's kind of like what the current situation in last 2 days. A lot of things has happened basically, like unemployment front, the inflation, interest rates, the dollar index has like fall down, which helps basically like all these multinational companies to increase their like profit, because if they do a lot of like do business overseas, their P&L basically like goes up. So all these like kind of things, people tends to be fairly like bullish about the market. So hope you like this video. So please do subscribe this, and have a nice day. I'll talk to you again. Thank you. Bye bye.